All right, week 19, outlook number 2. Let's get into it. Great British Pound futures going out to the 4-hour time frame. We are still in the range, and we actually decided to forego mitigating the area of interest that I anticipated price coming down to. We got a response based off of 50% or equilibrium, and we decided to drive higher. We created a new high here, which is interesting, which is something that it's really iffy, right? And the reason why I say that, we could just continue moving higher here, or this could be a high and then this is what draws us lower to take out these lows and move into the area of interest. But based off of range price action, I'm going to leave it be for the time being, and I still am expecting price to run. We're just effectively creating more and more liquidity as we move towards this high. It's just a matter of, would it make sense, like the logic, would it make sense for price to run all the way back down here to mitigate this and then run? Or would it make more sense for price to just, say that it mitigated this price gap here and we just run higher to take out that? So it's just, this is just range bound price action, not really much to say on that. Moving on to gold. Gold is doing gold things, range bound price action as well. It drove deeper into the discount, mitigated something on the discount side, and now it's, playing back. So we're just oscillating in gold. On NASDAQ, we have created a multiple. We're running away at this point. This is a pure on bullish run here. Not really much to say. You can just play the price action however you please. To be completely honest, I'm going to be waiting for more formal structure to form. We're in the very optimal phase of an impulse here on whatever price leg is present. The last thing we mitigated was this price gap here, in which we talked about, which was this price gap here. It mitigated this price gap mitigated that price gap. Then we had the impulse. We had a pullback, mitigation of, actually that's really a sponsored candle. Yeah. So we mitigated the open of this sponsored candle, and we've been running ever since. So yeah, we're just looking for price to either continue running or wait for a new high low to form and then a break of that low. Other than that, yeah, just play the impulse. And then for the Dow Jones, cool. We have decided, exactly as stated in the outlook 19.1, that we would get a response from this price gap, and we're heading back towards the high of, or this liquidity point, and looking to take out, this liquidity point is not even really relatively equal highs. I mean, it's basically just we're looking to take out this high and we're taking out this liquidity point here. So yeah, I'm expecting that over the next couple days. I'd be very surprised if it doesn't. But after that, assess the structural action to see if this continues higher, or do we begin our reversal and move lower. And then on oil, I definitely stated in oil that I'm expecting price to take out this high this month. And I pointed out that I was concerned of price action moving forward based off of the purge of this price gap. It invalidated this price gap here, and I believe I said that if price were to invalidate that based off of this, I could see price running lower to do something, and that lower seems to be a liquidity draw based off of these relatively equal lows right here. And you can see there that we have a run. To mitigate those lows, we performed a liquidity draw, we created a low, and now we're giving the price action to potentially move higher. So there's really not much to do on oil right now other than look for potential buys, because we still are in the discount side. But this was something that if you were in potential buy opportunities and you were playing this price gap, this is the reason why price ended up drawing lower. This price gap had already been invalidated, so automatically just get out of that trade. But nonetheless, this price drew lower, took out these relatively equal lows. We have a liquidity draw as our structural action, and now we're looking for a price to continue its run higher. All right, and then on to the cattle futures. So on the cattle futures, a trade that Christian and the students he took was a mitigation of this price gap here, and we're looking for targeting of the next high, just continuation of price action. And overall, this is in a bullish run. So yeah, let's just continue counting them cattle. All right, that's it for week 19, outlook number 2. Pretty short. Peace.